So thank you. Very good morning. I think this is the sort of final class of this semester. So as per my knowledge, I have completed all the syllabus during the last 15 or 21 sessions. So today, as I promised, I'm take through all the latest available past paper, which is January 2021 paper. Actually, in 2020 March and September, the institute could not conduct the exam as usual. So covering that 2 semester, they have conducted the exam in January 2021. You can able to see my paper as well, no?
Yes, sir.
Okay. Then in this paper, of course, as usual, there are 8 questions. Number 1 question, the first question is compulsory, which contain the 20 marks, short answer. First 5 questions are sort of multiple choices, and then other 5 questions are short answers. You have to give the short answers. Maybe you may familiar with the papers. And then out of other balance 7 questions, you have to answer the 4. So altogether 5 questions you have to answer. So 20 each question have 20 marks. So 100 marks. That is the structure of the paper. So we will start from the first question, which is the compulsory questions, and before going to the discussion on the paper, of course, I am going to describe the scope of my job. Today, of course, I am not going to talk much. Actually, you all are the people has to talk, and you all are the people has to answer the question. If there is anything new or conceptually new, then I will explain that what is that. Otherwise, actually, I am expecting the answer from you. Then that will give sort of feedback to me whether I have I have done my job properly. Okay, having that understanding, we will start with the first questions. So answer the following multiple choice questions by selecting the most suitable answer from the 4 answers given for each questions. Okay. And the first one is banks need liquidity in order to meet day-to-day operational expenses, fund loan disbursements, and maintain public confidence by honoring deposit withdrawals. All of above. Which is the correct answer?
All of the above.
All of the above. Because for the liquidity purpose, actually for operation expenses, we need the liquidity, and loan disbursement, we need the liquidity, we need the fund, and to maintain the confidence, to honor the deposit into withdrawal also, we need the liquidity. So all of the above would be the correct answer. And the second one is the existence of the deposit insurance scheme. The first answer, reduce the moral hazard problem for bank managers. Reduce the moral hazard problem for increase the moral hazard problem for bank managers. Has no effect on the moral hazard problem for bank managers, and increase the moral hazard problem for managers in the small bank, but reduces it for managers in the large bank. Before asking the correct answer, can someone say what is moral hazard issue? Because if we know that what is moral hazard, only we can answer the question. I think we have discussed this in the when I am explaining you about the deposit insurance in some section. I'm not sure which section, but I have discussed about the deposit insurance with you. At that time, I just explained you the moral hazard.
One party acting unfavorable to the other party in a contract.
Yeah. But in connecting to the bank, the financial business, we can say the moral hazard is one person decides the risk level but he is not responsible for that particular action. So if it is the deposit insurance, of course, the bank managers may think that, okay, we can take the whatever we can take the higher risk, because if something happened to the bank, then deposit insurance people will come and secure us. So that is sort of moral hazard, because they are taking the risk, but they didn't need to be responsible for the risk factor, because somebody else's will come and secure them. So in that case, which would be the correct answer, and why? Whether it's reduced the moral hazard, or which increase the moral hazard, or has no effect on the moral hazard, or it's for small bank increases and for reduces for large bank. Which is the correct one, and why?
Reduces,
Why do you say it's reduces?
because from the deposit insurance, the risk for some certain of amount, risk will be reduced.
Yeah, that's the thing. Actually, risk will be reduced. Then what will the manager will do is they will take more and more risk, because they are thinking that somebody else's will come and secure them. So it will increase the moral hazard problem. Moral hazard problem in the sense, they are one person doing some actions, and for the consequences of that actions, he need not to be responsible. That is sort of moral hazard. Okay, so if the deposit insurance are existence, then the bank managers will take more and more risk, having the understanding that, okay, the deposit insurance will come and secure them. So what will happen to the moral hazard? Moral hazard will increase. Are you agree or not? Okay, okay. Then third one is, which of the following is not an off balance sheet exposure? Okay, before reading these things, you will have understanding about the on balance sheet and off balance sheet item. I just given simple understanding. They are in the balance sheet item, or any asset and liabilities of the company or any finance institution could be broadly categorized into two categories. One is on balance sheet item, other one is off balance sheet item. Any assets and liabilities which appear in the balance sheet of a company or finance institution, which is called on balance sheet exposure. It may be liability, it may be assets. Mostly it may be assets or liability. But if there is any assets or liability which is not appear in the balance sheet, but it may create a potential liability in the future. It may be, just keep it understanding, it may create potential liability in future. Those items can be called as a off balance sheet exposure, off balance sheet item. You can just say on balance sheet item. There are several items you can say: fixed assets, loans and advances, investments in subsidiaries, and cash in hand. All the things are the on balance sheet item. Even the creditors and the rate receivable, payables, and equities, and everything is sort of on balance sheet item. But off balance sheet item, which are not it's not a currently liability assets, but it may create asset or liability in the future, particularly liability in the future. Those are called off balance sheet exposure. Maybe there are some examples. Letter of credit. Okay, banks may issue the letter of credit to the counterparty. If the customer paid and the bank settled that to the importer, the foreign counterparty, then there is no risk. But if something happened in that process, then that may create some risk to the, or a liability to the particular financial institution or bank. Or for example, the famous example we can say the letter of guarantee. Letter of guarantee in the sense, for example, if there is any procurement or anything in your institution, you may understand that we ask the bond guarantee or letter of guarantee from a bank to performance bond from the bank. Those times the banks may give a guarantee to the particular supplier. Then if supplier is perform well and everything is smooth, there is no risk to the bank or there is no liability. But if something happened, that may create a future liability to the particular bank. So those items, LC, letter of guarantee, and any performance bond, those items are called, and even forward contract agreements and derivatives items are mainly forward contracts are mainly the off balance sheet item, because currently there is no risk, but in future it may create the risk. Then based on that idea, just if we see that the side letter of credit, performance bond, investment in shares, letter of guarantee, out of which is the not an off balance sheet exposure. I almost told the answer, but just I am expecting answer from you. Which of the following is not an off balance sheet exposure?
Investment in shares.
Invest in shares, because investment in shares, of course, it will be in the on balance sheet. It will be in the balance sheet. So investment in the subsidiary, investment in the associates, or investment in the stock market, those are in the on balance sheet item. So that is not an off balance sheet exposure.
So, sir, I have a small question.
Yeah, sure.
So now when you say letter of credit, now if it's a user's letter of credit, of course there's a contingent liability. But when it's a site LC, you pay it off then and there. No, then why is it an off balance sheet item?
Actually, I couldn't understand what is the site LC and
now here the first answer given is site letter of credit.
Yeah.
And now
what is the meaning of site letter of credit?
Now site letter of credit is now when the documents come, you pay it off then and there. No?
Yeah.
Then why is it now if it's a site, you pay it then and there. If it's a use and LC, of course there is a period. There's a period, so there is a contingency there. When it comes to site LCs, can't you take it as a on balance sheet item?
But here it's in the definition is gave that a site letter of credit refers to the document that verifies the payment of goods or services payable once it's presented along with the necessary documents. So in that case, whether the bank you mean that the bank does not have any obligation to pay it?
The obligation is immediate. That's what I was trying to say. It's immediate, not after a period of time. Like for example, if you take a bank guarantee or a user's LC, the obligation will come after some time. No? So the obligation may come or may not come. So that is so it's a contingency liability. But when it's a site LC, you pay it then and there. No? So because of that, can't that also be the correct answer?
No, actually, because in this example, all other LCs and everything is sort of clearly an off balance sheet item, and I never see any letter of credit item in the bank balance sheet as per my understanding. Because
adding to that, in a on balance sheet item, there'll be a direct outflow of funds from the bank. But in a off balance sheet item, there won't be any outflow of bank's fund. In a off balance sheet item, in case of that, the commitment arises only, the bank will make sure the payment. But in a letter of credit, the customer is paying the money, not from the bank. So hence it will be a off balance sheet.
It may not be. Okay. Hussain, that may be the some additional information about to segregate the on balance sheet and off balance sheet item.
Yes, Sanjeev. Thanks. Thank you, sir, and thanks, Sanjeev. Thanks a lot. Thanks.
Okay, thanks. Then if you actually it's a good because I also cleared today. That's the difference between the site LC and usance LC. So it's thank you, Zai. And then the other one is cancellation of license issued to the license bank or license finance companies can be a reason of continuous violation of provision of the relevant act or directions or rules issued thereunder, failure of commencing business within a specified time period after issuing of license, carrying on business in a manner likely to be detrimental to the interest of depositors and creditors, all of the above. This is, I think, we have studied in the first few class, first class or second class. So based on that, there are some conditions under which the license of a bank and finance companies are normally cancelled. So what would be the answer?
D, sir. All of the above.
Yeah, all of the above is the answer, because when you actually when the bank or finance companies are not comply the relevant act and direction, and of course obviously because we have an experiences as well, and the failure of commencing business, because before they once they give the provisional license, and they have to start the business within the stipulated period. If any institution or any bank or finance company not started, then of course cancellation and carrying the business is not in likely to manner that affect the depositor and creditors will be the answer. So the answer will be all of the above. And the fifth question, the last multiple choice question, the company may become insolvent if it cannot pay creditors in full after realization of its assets, or makes losses, or has a negative working capital, or cannot meet its budgeted profit, which is the insolvent. What is the definition of insolvent?
That company being unable to meet its long-term and other obligations.
Yeah, that will be considered as a involvement. In a particular definition, we can say that the present value of the present and net asset value of the company is lesser than the present net value of the liabilities, all of the company liability, that could create an insolvent situation. It's a long-term concept. That means in a company in a long term they could not meet their counterparty obligation, that would be the insolvent. So what would be the answer?
Answer A.
Answer A. Yeah, cannot pay creditors in full after realization of its assets. And what is the mean by financial fraud? What is the sort of answer? Any any wrongdoing which could create a personal benefit, a personal gain to the particular person, that could be say as a financial fraud, or any unethical action which could create a personal gain to a particular person, that may be financial fraud. There are several fraud we can mention in the past history, which occurs time to occurs in different financial institutions. Some so that you can, because this is just for a 2 marks questions, you need not to write much. Just write a specify answer in a or to 1 or 2 or 3 sentence would enough for this, actually, because when I'm correcting the papers, some other papers, actually I'm not correcting this subject, some other subjects, for 2 marks sometimes people are writing half a page. Of course, no point, because this is just 2 marks. If you write a half a page or 2 sentence, precisely answer, because examiner expect precise answer for this question. So if you give that answer, that's fine. And the other questions, name 2 licensed specialized bank in Sri Lanka.
NSB and State Mortgage and Investment Bank.
Yeah, that's a 2 licensed specialized bank we can say. And other than that, of course, the DFCC we can say. Those are the licensed specialized bank. There are 6 banks, I think, on the licensed specialized banks in Sri Lanka. And list 2 actions that can be taken to prevent the money laundering. What are the 2 actions a finance institution can taken to prevent the money laundering? What are the actions?
KYC and appointment of a chief compliance officer and training the staff to ensure that the transaction are in line with the banks and the other relevant laws.
Yeah. That would be the answer. You can write it down, the 2 answers. The first one is a bank can implement the know your customer policy in a proper manner. That's the first thing. Another one is bank can encourage all the money laundering activities, all the money encourage to comply with all the requirement related to money laundering or prevention of terrorism financing. So, and bank can give a proper training or capacity building for the staff. Through those things, they can prevent the money laundering activity. And what are the offshore companies, which we have discussed in extensive in the first or second class? What is the offshore company? I think first class.
Companies registered outside Sri Lanka and having its registered business place office in Sri Lanka.
Yes, I registered outside Sri Lanka, but they have an office here. I think, if I am right, they can't carry out any businesses in here, but they can have an office in Sri Lanka. That is called the offshore company. The simple definition: any companies or any entity incorporated outside or in a foreign country or under the foreign country's law act or companies law and act, it can be called as a offshore company. And the 10th one, the name licensed finance company of which license granted to carry out the finance business was cancelled by the Monetary Board of the Central Bank of Sri Lanka in 2020. Actually, time to time, there may be questions with the practical in the sense current situation. So this is actually at that time it's an applicable questions. So what would be that? You may remember that. You can recall that. What is the company? His license has been cancelled in 2020. The finance company.
The finance.
The finance is the correct answer. Okay. So I think students, you can. It's very simple question. You can. The first question, of course, you should have sort of overall idea. If you have the but not the in depth. But if you have the overall idea, you can get a sort of 20 marks very easily. And compared to other papers, this paper, of course, sort of easily accessible, easily answerable to the students. And if you go to the second question, generally the second question is about the corporate governance. That is not there's no hard and fast rule, but general practice. You can see the second question as in the corporate governance. So the first narrative: a successful finance institution is led by an effective board whose role is to promote long-term sustainability of an organization by generating value for shareholders. Okay. The first question: what is corporate governance? Briefly explain the benefit of corporate governance to the finance institution. I think we have already discussed and extensively discussed. I think I gave some definition also, some authenticative definition also in the class. So can someone answer the questions? Then I just listen and pass it on.
Yeah, sir. Can I answer, sir?
Yeah, sure.
Corporate governance, it involves a relationship that exists between the company's various stakeholders.
Yeah.
Can I tell the benefits also?
Yeah, sure, sure.
First, it ensures that the company is well managed. Second, assists the company to be company's employees to be treated equally.
Yeah.
Third, it creates a positive impact on the stakeholders.
Yes.
Fourth, it helps to minimize wastage and corruption. Fifth one, assists the company to move forward with a clear goal.
Yes, yes, of course. The corporate governance, as a student mentioned, actually, it's a giving a sort of relationship between the stakeholders and the management, because the stakeholders and management are two separate people, and we can simply say that it is a set of rules and regulations which how a company could manage by the directors is called corporate governance. Give me a sec. Okay. We'll continue. So that is called the corporate governance, and the benefit, as that student mentioned, there are so many benefits we can mention, and this is we have already discussed, and his one also those benefits are correct. And the second one is discuss the difference between the rule-based approach to corporate governance and the principle-based approach to corporate governance. What is the difference between the rule-based approach and the principle-based approach? Some other students can answer.
In a role-based, they will be following set of rules, whereas in a non-role-based one, they don't follow any rules or anything like that.
Yeah, actually, the rule-based approach is based on any existing law or any existing directions. If set of rules are prescribed, then that is a sort of rule-based approach. You have to, for 5 marks, you have to write it somewhat an elaborated basis. So, and in the rule-based approach, of course, for the any regulated entities, then generally the rule-based approach is issued, and the companies or institutions coming under rule-based approach has to compulsory follow those rules. So generally for the banks and finance companies and listed companies, this rule-based approach is issued. The corporate the principle-based approach is sort of the approach which can be based on, which does not prescribe any rule, but which give a principle, and based on the principle, the company has to be managed by the directors. And that is if and comply or explain policy we just studied, I will remember, in the sense, in the principle base, if they want, they can comply, or otherwise they can just explain that to the shareholders. Particularly, I remember I explained to you all that, for example, if they wanted to have 6 meetings or have to have adequate meeting, if they could not conduct the board of directors could not meet the adequate meeting due to some reason, maybe COVID or something, they can just explain and say that stakeholders, we could not, even though the principal expected that corporate governance principle expected that this much of meeting has to be conducted, but they need not to conduct. So that is the difference between the rule-based and principle-based approach. And the third one is the board has carried out regulation assessment regular assessments individually or collectively on their own or with the assistance of external experts to support its performance. Do you agree? Explain your answer.
So can I answer?
Yes, sure.
I agree with the comment.
Yeah.
The members of the board are required to have a fair knowledge of expertise in fields such as accounting, IT, compliance, risk, and commercial law. to
Yeah.
oversee the business functions of the company. However, there is no barrier for the directors to obtain specialized services internally or externally to carry out its functions. Hence, the board has been segregated into various subcommittees such as HR, remuneration, board audit committee, and so on, who will closely work with the internal expertise in the relevant departments or the top management. As well as seek assistance externally when the need arises. For example, if there's an audit, if there's a financial fraud, then they can get the external assistance of external auditors. So I agree with this comment.
Yeah, actually, this is also we have just discussed, and the student's answer is correct. And actually, to simplify the answer to understandable manner, the board of auditors, the board of directors need to carry out several functions: control, managing, and supervising, advising to the company, and all. And if they can just they are expected to have a reasonable expertise on them, or to carry out their functions. But if they need any assistance from external experts, they can obtain that assistance and to carry out their activities. And actually, when they are obtaining that, they have to make sure that this is a reliable person, and they can get the external expertise from that end to deliver the deliver their duty to the as a board of directors. So that would be the sort of simple answer you can give. And you can actually you have to elaborate, because this is sort of 5 marks question, so you have to elaborate. And the fourth one is discuss the role of charm. This is which we have already, I think we have already discussed. Can some students can just explain what is the main role of the chairman of a company? Actually, there's a separate slide which we have discussed, so I'm not going to give an answer detail. I'm just wanted to get the feedback. What is the main role of a chairman?
The smooth functioning of the board.
Yes, he or she has to make sure the smooth functioning of the board is his main role. Actually, the chief executive officer, we need not to mention, I just give an additional information. Chief executive officer is in charge to the executive function or operation of the company, but the chairman is in charge to conduct the business of that particular board of directors, and he has to encourage other members to contribute to the board decision making, and he has to ensure the fair functioning of the board of directors. And actually, I have mentioned in the slides 405, you can mention that as a role of chairman. I think students can now understand that the papers are actually, if you have studied the things, the papers are easy to approach. The third question is generally coming with related to financial reporting and auditing, which we have discussed at the latter part of our class. So this is actually, it's about the financial reporting. And the financial reporting refers to the standardized process deployed to deliver stakeholders an adequate depiction of the financial position of an organization. The first question, what is the difference between the financial accounting and managerial accounting? Can someone? What is the difference between the financial accounting and this management accounting?
Management accounting is preparation of budgets, future accounts for future activities, and financial accounting is preparation of statements which are transactions which have been already happened.
Yes, actually, that is a financial accounting. You can just give the differences comparably financial reporting is the financial statement giving financial or financial performance of the institution to the outside people, particularly shareholders or investors or any other outside general public or regulators or anybody. But managerial accounting is sort of the operational based accounting, which is giving or created, prepare to consume by internal people, particularly the management of the company. So that is the main difference. Of course, you can say that there are several differences you can mention. I think we haven't discussed at the class. That's what I'm just trying to give some detailed answer. First, you can say that financial accounting for the consumption of outside people, manager accounting for the consumption of the managers, internal people, and the financial accounting, as that particular student mentioned, it is about the historical database accounting. But management accounting, of course, forecasted based accounting, and financial accounting generally give some quantitative information particularly, but managerial accounting will give sort of qualitative and quantitative, which give more of sort of more decision making purposes. Those type of differences you can mention for the financial accounting and managerial accounting. The second one is explain precisely the benefit of financial reporting. What are the benefit of financial reporting? I think we have discussed this in the class. I have just put this heading, I think, importance of financial reporting or benefit of financial reporting. You can just say that. What are the financial reporting benefits?
From a investor's perspective, it gives a overview whether to invest in that financial institution or not to invest. And from board of directors and the managing director's perspective, to take future actions based on the past information.
Yeah, there are several benefits we can get it from the financial reporting. For example, it gives a precise performance of the particular company or particular management to the stakeholder. That is the first benefit we can just say the financial reporting. And the second one we can say that financial reporting is sort of time to do it has to be in order to comply with the requirement of the company. The financial reporting help to as preparing and reporting the financial reporting is an important thing for a company or finance institutions. Likewise, you can there are other listed. I think I have listed in the particular slides. You can mention those 4 or 5 benefits as a financial reporting. And other one is what are the limitation of the financial statements? What are the limitations which we have discussed?
Those may not be comparable with other companies' financials.
Those are not comparable. One. What else?
Historic data.
Sorry?
Historic data in
financials. It
financials.
is basically the historical data.
Different
What else?
accounting policies used.
Different accounting policies. And
it is not adjusted with the
exactly. It is not adjusted with the inflation number. Those are the limitations. You can just say that. I think it also we have studied. You can just list it out. What are the limitation of the financial statements? So as you all mentioned, there are several limitations we can mention. And briefly discuss the role and responsibility of the board audit committee in the financial reporting. I think in the last class, I have explained. There are 2-3 slides we have explained about the board audit committee's responsibility related to the external auditors, related to the internal audit functions. Likewise, we have discussed what are the responsibilities we can one or two just if you all mention that, then we I know that you are on the track. Then I can move to other questions. What are the responsibility of the board? Role and responsibility of the board audit committee. The first one is we can mention that with related to the external auditor, they can evaluate the external audit function and its scope and recommend it to the board about the external audit. And they have to review the internal control process implemented by the manager and whether it is adequate enough. That is one of the responsibility. And time to time, they have to review the report submitted by the chief internal auditor about the findings of the company. And they have to make sure that all the requirements or all the regulations and direction issued by the regulators are complied by the staff of the company or finance institution. It's an audit board audit committee. I think there are several things I have listed out in the slide. You can see, and these are some of the four things you can mention. Okay. This is the fourth question, sort of short notes. So actually, you need not to follow, but that this I can just give as an advice. If there's a short notes, and if you'll know that, it is always better to select the short notes because then you can earn the marks through the short notes. The comparison also very easy. Just you can compare the two concepts in each concept into a sort of very briefly. That will give you a sort of score. It's easy to score. So this is the fourth one. Is related to briefly explain the difference between each of following fair. The licensed finance companies and specialized leasing companies. What is can someone just tell about what is licensed finance companies and licensed specialized leasing companies and main difference between two? What is the main difference between the two licensed finance companies and specialized leasing company?
In a finance company, they can mobilize deposit, but in a leasing company, they can't mobilize the deposit. They can only into lending business.
Yeah, exactly. That is actually the main difference. So we can give an answer because this is sort of short notes. So you can just give an answer. The licensed finance companies which are giving under provided under license and the license provided license under the Business Finance Act number, I think number 42 of 2011, I think, if I am correct. Under the Business Finance Act, the license granted by the Central Bank of Sri Lanka to carry out the finance business. These licensed finance companies, which we can call as a shadow banking sector, because they are more or less carry out the banking business, except foreign currency transactions and some other maybe current account, like some other transaction, they are shadowing the banking business. But specialized leasing company, of course, they have created they have been given license to carry out the finance leasing business under the, I think, 2000 Act. It's number 26 2000 or some act. You have to just make specific. If you can specifically mention the act number, that would be added value. So under that, it has been given, and particularly they can't mobilize any deposits, but they can engage with the financial leasing business. Actually, the license are given to to engage with the finance leasing companies. And some additional information, of course, in Sri Lanka there are only 3 companies dedicated to carry out the finance leasing business or specialized leasing companies. But there are several other institutions, they have been provided specialized leasing business, the provision to engage with the finance leasing business. One is certain licensed commercial banks are given certain licensed specialized banks, and finance companies are given license to conduct with the finance leasing business. Those things you can just write it and compare the mention the particular main difference, put enough for earn the 5 marks. And on balance sheet item, off balance sheet item, of course, I think in the first questions I have explained to you all very detailed manner. And in addition to that, as one of the students mentioned, you can mention that the off balance sheet item generally it will not create a cash flow through the company. So that also you can just mention that. And I think on balance sheet item and off balance sheet item I have already discussed with you all. Okay, the next one, vertical integration and horizontal integration. Can someone what is the vertical integration, what is the horizontal integration? First of all, this is coming under which section? Under the mergers
and acquisitions.
Yeah, exactly. Under the mergers and acquisition is coming. So what is the meaning of vertical integration? Simple answer. Simply, because you can write it in a very formal way in the exam. But when we are discussing that, if you understand the concept, then you can write it in your language. What is the concept? What is the vertical integration? What is the horizontal integration?
In a vertical integration, a particular company taking control of its suppliers and distributors. So if they take control of their distributors, it was backward integration, and the forward integration is backward integration is suppliers and forward integration is distributors.
Yeah.
And in a horizontal integration, company taking control of another company which was into the same industry, like garment factory taking control of another garment factory, which is horizontal.
Exactly. That is the answer. I think other students should have listened that. The vertical is sort of suppliers, the company which taking the control of the company which supplying the raw material, or the company which distributing their product. Then that is called vertical integration. And horizontal integration, same type of business companies are getting control or merge. Then that is horizontal integrations. For example, we can say that garment factory, or sometimes 2 finance companies. Now this master plan is okay. I'll try to give some practical or current informations. There's in the finance company, there's a sort of master plan is going on. Under the master plans, the central bank is expected to strengthen the capital level of the finance companies to avoid future failures of the finance companies. So what they have introduced a master plan. Under the master plan, they encourage the finance companies to merge themselves, or to merge among themselves. So those type of merge may be considered as a horizontal integration. Okay, contingency funding plan and business continuity plan. What is the contingency funding plan and business continuity plan?
Contingency
funding plan. Yeah. Go ahead.
Contingency funding plan is mostly on to avoid a liquidity crisis,
Exactly.
whereas a business continuity plan lists out plans, resources, and procedures that are needed to restore a business after it has got affected by a disaster.
Exactly. Actually, that is the core idea you'll have to keep in mind. The contingency funding plan is a plan to manage a liquidity stress situation of a particular financial institution. Okay, so a particular financial institution, they have already have a sort of contingency funding plan with other bank or finance institution. Okay, under certain stress condition, the particular other counterparty institution has to give funding to this particular finance institution. That arrangement is called contingency funding plan. But business continuity plan is sort of to manage the disaster situation or crisis situation. So, particular disaster situation, it may be natural disaster or man-made disaster. So, in that case, the banks will have sort of business continuity plan within it, and time to time they will test their business continuity plan. And if there is any natural disaster or man-made disaster, so how can they recover from that disaster and run the business continuously? That type of plan is called business continuity plan. Under business continuity plan, most of the institutions are having disaster recovery sites. Disaster recovery sites, of course, I think we have discussed already, because that is another site where if something happened to the particular business place, they will just immediately move to other site and then start their business from that site immediately. So that is disaster recovery site. So if you write those things, then that would be the contingency funding plan. I think students, do you feel that is I think you'll sort of have a confidence that okay, we can answer the questions based on what we have studied. We can answer the questions. That confidence will give. Yeah.
Yes, sir. We are very confident. Thank you very much, sir.
Okay. That's what the purpose of the study, of course. Okay, the fifth one is a well-functioning financial system is fundamental to a modern economy, and banks perform an important role in this regard. The first question is, why do you think that banks are special than other organizations in an economy and they are required to be regulated? I think which we have discussed in the first class. Why a bank is a special organization compared to other institutions in the economy, and why they need to be regulated? Why it is considered as a special? Because we have studied that a bank or cash money transaction is important to smooth function of an economy. Okay, so these banks enable the economy to function smoothly. That you can say first thing. And the second thing you can mention that a bank doing a sort of the resource reallocations in the economy. The resource reallocations mean what the banks are doing is banks are getting fund from excess people or the surplus unit and giving fund to the deficit unit. So those by doing those things, they are just contribute to develop the economy or economic growth activity of a country. Another thing is the particularly the last sentence of this question, that why they have to be regulated. You can say that the bank or particular banking business is running purely based on the confidence of the depositors. I think I gave an example to you all that the buying of goods in a supermarket. Okay, just buying and finish it off the transaction. But if you wanted to deposit in a bank, you have to keep, okay, for the 1 year, this bank has to be survive and has to repay the money to you. You should have the confidence on that. I gave an example. So like that, you can mention that it is basically based on the the confidence of the general public, the banking sector is functioning. So it has to be regulated properly for the to the smooth function of the economy. So those are the sort of broad answer you can give for these first questions. And the second one is, why do you think that public confidence in banks is important? Briefly explain. I think this is slightly connected to the first question. Why the public confidence in a bank is important?
So one reason could be the payments methods introduced by the banks. If it is solid, then the people will go through using the banks with confidence. If not, they will use measures which are unreliable, and that will be bad for the economy.
Yes, you can say that. Actually, you can say that the public confidence, as I explained in the previous question, the public confidence is important because the bank is mainly run with the depositors' money. So in other organization, of course, they don't run with they are mainly run with this owners' money, shareholders' fund. But the bank is mainly run with the depositors' fund. So to maintain that confidence, by maintaining the public confidence, they can generate more and more deposit. By generating more and more deposit, what they can do is they can generate more funding sources to the particular banking business. That is the first thing. The second thing, you can say that the public confidence is much important. Then only the depositors will come and deposit in the particular finance bank or finance institution, and that will ensure the continuity of the banking business, of course. Another thing is banking system as a whole. To survive the banking system as a whole, the system stability, each and every bank should have stable, and public should have the confidence on each and every bank. If something happened to one bank, that is the main problem in the banking business. You will have to explain that. If something happened to some issues on the particular one institution or particular one bank, that may create a contagion effect to other banks as well. Contagion effect to other banks. What is the meaning of contagion effect? If something happened to one institution, that will create an issue to other institution and other institution, like chain effect. So to these reasons, the public confidence in the banks is important. Understand? I think this is also a slightly we have discussed. You can just answer the based on that. And what does it mean by too big to fail? Too big to fail. How many of you all heard about this word? Too big to fail. Fail.
Those are the banks, DSIB, falling under the DSIB category. In Sri Lanka, we have a commercial bank, Bank of Ceylon, which are falling under the first category, and the second one, it was HNB and People's Bank, which are categorized based on their capital level. So,
Yes, you actually your answer is right. Actually, your answer is right. The too big to fail is the concept firstly created in 2008 and 9 financial crisis, when Lehman Brothers had an issue that created sort of a issue disturbances to entire system of the US. So then they say that it's too big to fail. It means that you can just explain the too big to fail is, if a failure of one institution or bigger institution or one institution disturb the entire financial system of the country, then that could be that could be described as a too big to fail. That means that the particular institution is too big to absorb the failure or failure, or that could create a disturbances to other or India financial system of the country. In Sri Lanka, or after that financial crisis, there are the Basel Accord. The Basel document says that okay, identify the systemically important institution or banks. So these systemically important institutions under this concept of too big to fail concept. In Sri Lanka, we have identified 4 banks as a systemically important banks. That is under the different criteria. First criteria is total asset size of the bank. The second criteria is the interconnectedness of that bank. Interconnected means the connection between this bank to other bank. It means they may borrow from other banks, or they may place the cash with other banks. Likewise, there may be interconnections. So through the interconnections and all, likewise, there are some criteria. So as that particular student mentioned, sorry, because since I am on the screen, I couldn't observe that who is speaking. That's what I couldn't mention your names. Sorry, that's what I am mentioning as a student. So in Sri Lanka, bankers loan, commercial bank, People's Bank, and HNB. These 4 banks are considered as a systemically important banks. Okay, what are the solution for to handle the too big to fail problem? Of course, what they can do is in the world and in Sri Lanka also, what is the solution is to closely monitor these banks. The first one is for other institution. If, for example, if other institution once in 2 years, if they go for on-site examination, then what they will do is for these important banks every year they will monitor. That is first. The closely monitor the systemically important banks, or the 2 big banks or big banks. And the second thing you can mention that discourage those banks to take higher risk. Okay, how can we discourage those banks to take higher risk? First thing is we can do is, so generally in the global and Sri Lanka, what they have done is introduce higher capital requirement to that particular systemically important banks. Then what will happen is the particular banks, their capital requirement is high, so they can't grant much or higher loans to a significant number of loans to the risky areas. Because if they wanted to give that risky areas loans and advances, then they have to maintain higher capital. So that is so through that they are discouraging the banks to taking the higher risk, and closely monitor taking the higher risk, and create more cushion to the bank. For example, for other banks, their capital requirement in Sri Lanka, what is the capital minimum capital total capital adequacy ratio in Sri Lanka generally?
20 billion, is it?
Yeah, that is minimum capital requirement. This is minimum capital adequacy ratio. Generally is 12.5. The minimum capital adequacy ratio is 12.5. Okay, but systemically important banks, they have to maintain 13%. And the other two, the second category of I think the HNB and People's Bank has to maintain 13%, and other bank, commercial and bankers loan has to maintain 13.5. So they have the individual, the basic idea is they have to keep more cushion for their operations. So through that they can solve this too big to fail problem. So that you can just capture that the idea, and you can answer the question for the 4th one. Understand? Okay. Actually, the number 6, of course, I'm not teaching you all. So I like to skip this question because okay, if the time permits, I'll come back for these 6 questions, because This is strategic plan. Mr. Gamanayaka, I think Mr. Gamanayaka would have teach you all this strategic planning.
Yes, sir.
Okay. Then 7.1 is the compliance function, our favorite one. The compliance function should monitor and evaluate the effectiveness of internal controls in line with management in ensuring compliance with applicable laws, regulations, and internal rules. The compliance function should be a part of the organizational culture. Do you agree? Explain your answer. What is that answer? Whether you will agree or not first.
Agree.
Yes. The complaints, others are, what is your opinion? Whether you will agree or not?
Agree, sir.
Yes.
Agree,
The
sir.
complaints function should be, we have studied this complaints culture and all in detailed manner. So it has to be part of the organizational culture, complaints function. And when banks, or financial institutions can ensure the compliance, high compliance, by creating this as a part of the organizational activity and encourage the staffs to comply with all the rules and regulations and other requirements and internal procedure by the staff. Likewise, I think the part of the organization culture, then for the you can say that, I think you would have remembered that we have studied that when the top management has to give the priority to comply with these rules and regulations and give the high priority to the compliance functions. And that's why it says that start from tone at the top. So start from the top management and it has to be coming throughout the bottom. The compliance culture has to be implemented in the organization. Then second one is, what are the consequences of being non-compliant? What are the consequences? This is, you can just list out. What are the consequences?
There'll be legal implications like and reputational issues if you're not compliant and you are being punished.
Yes, yeah. The legal, first one is legal consequences. For example, if the cancellation of licenses are those sort of legal complications, the implications. So it could be that much, but you can say that the legal consequences could be, and litigations, or the regulator can put some penalties, and you may face the legal litigations by non-compliant, and it may affect the reputation of the particular institution. For example, the recently again the FIU of the central bank issued, okay, we have put the penalty for 3 or 4 institutions which have not complied with the anti-money laundering compliance. So those type of things will affect the reputation of the particular companies and finance institutions. And on top of that, other consequences is financial losses. Because when they are punishing or when they are putting the penalties and all, it may create sort of financial losses to the company. So that would be the answer for the question 2. The third one is, the briefly discuss the challenges faced by compliance officers. Okay, what are the challenges faced by compliance officers? If you are working the finance institution, you may heard about that. What is the first challenge? Because the most of the staff and senior management or manager, middle office manager, or most of the people in the finance institution think that the compliance function and risk management functions are additional burden to the company. or finance institution. The view of the people, the mentality of the people are thinking that the compliance function is an additional burden to the particular company. So what they are doing, they are not prefer to comply with the comply with the compliance officer's recommendations. That is the first challenge they may face. The second challenge, you can say that the top management of the company sometimes may not prefer to implement all the compliance requirement, all the legal and direction and regulatory requirement related to the company. So that would be the other challenge. If the tone at the top, the top management, they have not started to comply, then that may affect the other level, medium level, the middle level, as well as the bottom level as well. So that is the second challenge faced by the officer, the compliance officer. Other one is, this is, you can just say that when there is a trade-off between the compliance and profit, then sometimes the management may prefer to get the benefit of profit by compromising the compliance functions. So to avoid that situation will be a challenge for a compliance officer. Another thing is the creating a compliance culture within the institution. It's a task, a challenging factor for the compliance officer. These are the things you can mention for the question 3. The other one is explain precisely the relationship between the compliance function and internal audit function. What are the relationship between the compliance function and internal audit function? I think we have studied these things.
Compliance access the second line of defense, and the audit access the third line of defense in an organization.
Yes, the compliance functions act as a second line of defense, but the internal audit give the third line of defense. And compliance functions, the internal audit function given assurance to the management all the internal control system and all the rules and regulations are complied by the company in the many operational day-to-day activities of a company. But compliance functions promote or ensure the implementation of this following the rules and regulations by the particular company and finance institution. Those things you can mention. And the other thing is, you can mention the internal audit function are subject to the compliance functions, but not vice versa. The compliance function is not all the internal audit functions, they don't check. The compliance function, people don't check the internal audit function, but internal audit function can be check the compliance function. And internal audit report will facilitate to ensure or improve the compliance function of the particular financial institutions. Likewise, these 4, if you can mention in a detailed manner, that would be enough. I think we are moving to the last questions. Friends, are you tired?
No, sir.
Okay. The write the short notes on because most of the students are sort of initially they had a sort of high enthusiasm and answered. Now sort of silence. That's what I just thought that. Okay. Write short notes on the following. What is the preferential treatments? Can someone give the answer? Preferential treatments, which we have studied under the related party transaction.
This means acting unfairly and outside the appropriate legal process to give advantage to an individual or a firm.
Yeah, this is basically for this question. What you can do is you have to answer for 5 marks. First, you have to say that what is preferential treatment. The preferential treatment is sort of giving some special or above the arm's length transaction, some special, you can just say that preferential treatment is giving some special treatment to a particular people, those who are already connected with the company. And that is called a preferential treatment. Then you can give sort of example for the preferential treatment. What are the circumstances of the preferential treatment could arise? For example, if a loans and advances granted to the related company, what they can do is they can grant for the lesser or lower interest rate. That could be created a preferential treatment. When a director, spouse, or any related party deposit the money with the bank, they can give higher interest rate for the particular related person. Another thing is, you can say the preferential treatment example. If a bank getting a service from outsiders, they can give a service to the related company, a particular person or particular company, without following any tender procedure or any policies adopted by the bank. So those are the preferential. So what you can do is, you can just give an example, the sort of small definition on the preferential treatment, and then list out some preferential treatment activities for this answer. Then that may give a chance to you all to earn the full marks. And maturity mismatch we have discussed in the liquidity. Can someone else?
It is because bank is getting short-term maturing liabilities with those funds. They are lending to long-term maturing assets. So then there'll be a maturity mismatch, like because the liabilities are in short term and the assets are invested for a longer period. So it will create a liquidity issue for the bank. That is what called maturity mismatch.
Yes, exactly. Banking business itself or inherently created a maturity mismatch risk. It means the banks collected short-term deposits but granted long-term loans and advances. So there is a mismatch between the assets and co-assets and liabilities. So bank has to manage this mismatch effectively in order to survive in the banking business. Okay, this is a sort of inherent risk to the banking business. And for the liquidity management of a bank, the managing the maturity mismatch is an important. For some banks, they may have internally set limits for different basket of mismatches. They may say, okay, anytime the cumulative maturity mismatch should not exceed this amount of or these limits. So likewise, there can be mitigations against the maturity mismatch, and the successful management of maturity mismatch will give a strong management on liquidity risk of a particular bank and expense. So that actually the student's answer was right. They're exactly right. I just given additional information. And deposit insurance scheme, which you all heard about several times. There's a student called Prasanna. Can answer for this. Or anybody else? Some volunteers? Or Gayani?
It's some sort of guarantee given by the CBSL for the banks.
Yes, you can just write it in a way that's actually your answer is sort of, you're coming to the point that in order to secure the small depositors, the central bank, and to create a confidence on the financial system, central bank provide a insurance system to the depositors is called the deposit insurance scheme, which is introduced, I think, in 2010, and initially it was 200,000, and then it's gradually increased by the time, and now a depositor can get maximum of 1.1 million for their if the particular bank or finance company or member institution, you can call as a member institution, failed, or the or license of that member institution is cancelled by central bank, then the depositor will get the money. I'm just asking whether the foreign deposits also included under this deposit insurance scheme, or only rupee deposits?
Included.
Exactly. The foreign deposit also included. So if it is a foreign deposit equal to 1.1 million rupee, then they will the central bank will give the compensation. But I think they will give only the rupee, not in the foreign currency. What is the insider dealing?
It's an illegal practice where that doing the transaction in stock market with the with stealing confidential information and all.
Yeah, exactly. That means a market participant knowing the insider information and using that information for the personal benefit of his and selling or buying additional shares or any additional securities is called the insider dealing. And in the world, there are several examples you can say the insider dealing. I think I can just say that the famous case in US, one of the Sri Lankan involved, maybe Raj Rajaratnam or somebody. He's punished under the insider dealing. He knows that information and use that insider information and that is used for the personal benefit or for the stock market or the securities market. So that is called insider information. You need not mention the name or anything. You can just elaborate the insider dealing. What is the insider dealing and all. I think that's all about the paper. So if you are actually the strategic planning, I'm thinking to just explain or not, because it's not ethical. I'm just discussing somebody else's topic, and if if there is any contradiction, and then it's not nice. That's what I'm just skipping. Sorry, students. This number 6 I haven't touched. I'm not going to touch because it's somebody else's area. If it is a paper class, of course, that's different. But yes. If you all have any questions, I'm giving a chance. I think Hussain, I send you the some observation to you today that for that answers, so you can just go through it if you need anything.
Okay, sir.
Yeah, and any other students, if you all need anything, you all can just mail me. My mail address is slankapati@gmail.com. You can take this example, sorry, the spelling at the my tudes. Slankapati without any space or anything. Slankapati simple. Slankapati@gmail.com. So before the exam, if you have any doubt or anything, you can ask from me, and I hope I have done my job sort of properly. So all the this paper showing that you can answer the questions if you have studied the paper properly or studied the notes and my presentation properly. You can answer the paper and pass the exam. Not only the pass the exam, you can get the good marks. If you'll have any questions, I can answer. Any other area?
Sir, can you please upload this paper to the classroom?
Yeah, I'll ask them. I'll ask them to upload this paper. I'll ask them. Okay, I'll ask Kavindra to upload it.
Sir, a small doubt in the second MCQ question.
Yeah, sure.
That regarding that
Moral hazard.
moral hazard.
Yeah.
So here the bank managers, it increases the moral hazard problem for bank managers, right? So they will intentionally they can do some fraudulent activities, right, sir? Because they know that even though if they do some malpractices, it will be covered under CBSL deposit insurance scheme, right? So is it a good thing, sir?
Actually, that is one of the disadvantage of insurance scheme. The more, because for the insurance scheme there are some limitations. There are benefit as well. There are a lot of benefits, but there are some limitations. This moral hazard issue is one of the disadvantage or limitation of the deposit insurance. We can't say the fraudulent activity. I don't know. We can mention as a fraudulent activity, but the bank managers can take excessive risk. The taking risk is not a fraudulent activity, of course. Fraudulent activity in the sense they can just involved with the unethical things or something, unethical or some wrongdoing, fraud. But this is taking excess risk. If you see some finance companies, they are taking more excessive risk. They are granting loans and advances to very highly vulnerable customers. Even you know, the microfinance and all, they know already that there are the particular woman got 4 loans or 5 loans. They are just granting the 6 loans. That is sort of excessive risk. So those kind of moral hazard could created through this deposit insurance, because the deposit insurance may encourage those activity, because okay, if something happened, that may be the deposit insurance will cover. That is actually one of the disadvantage of deposit insurance. But by considering the other advantage, because okay, when a deposit in a bank, naturally it is expected that the particular depositor has to evaluate the risk of a particular finance institution, and having good knowledge about the risk of the particular institution, they have to deposit in a bank or finance companies. But we can't expect those things from a small depositor, like a very layman people. They don't understand much about the rating, because okay, that is a simple thing we can understand. Okay, if it is a triple A, it's a good company, and double A is other somewhat, but even they don't understand that. So to cater that type of small depositors, the deposited insurance is implemented, even though this is one of the disadvantage. Increasing moral hazard is a disadvantage arise through the deposit insurance. I may touch the your point.
Yes, sir. Thank you.
Okay, if you all don't have the question, I can stop the class with this, and I can even
Excuse me, sir.
complete this. Yeah.
Something about revision classes. Do you any idea?
Actually, these revision classes, they are going to conduct from next week onwards, the paper classes, where they wanted me to cover. They have allocated 12 hours. Earlier they allocated only 8 hours. This time they have increased 4 hours and 12 hours class, where I am going to discuss the main important points of these theories for first 4 hours, and balance 8 hours I will discuss last 3 or 4 papers. So that is my idea. I think the 10th and 11th and then 13 and 14 or something. I think Wednesday, Thursday and Saturday, Sunday, they are going to have it that. And maybe if institution permits, I can have a sort of one class just before the exam, 1 or 2 weeks before the exam. But I don't know how practicality is to conduct that way, because again rearranging. But okay, if it is a next week exam or next month exam, of course there is a practicality. But this is, I don't know how long it will practically. But if you want for the sort of revision and sort of covering 3-4 papers, then of course you can join that class, that revision class, which we are going to conduct the next week. Okay. Anything you all wanted to ask? Okay. Since you all don't have the questions and all, I'm going to complete this semester, and wish you all the best and get a good results. That's all about. Thank you.